Hi, I'm Renee Dale. I'm an associate broker with Long Realty.
And I'm Bailey Francis with Prosperity Home Mortgage.
And we are here doing our mimosas and mortgages to discuss the top myths today in lending. Cheers.
Cheers.
So Bailey, I want to start by asking you, I think one of the most common myths that I've been hearing is that you have to have 20% down in order to qualify for a loan.
It absolutely is the number one, for sure. So there's a lot of different programs out there right now that a lot of people unfortunately just aren't aware of. But conventional financing is probably the most common. And if you're a first-time home buyer, meaning that you haven't owned a home in the last 3 years, you can put as little as 3% down. If you aren't a first-time home buyer, the minimum down is 5%. So still definitely far away from that 20% down requirement that most people think. If there's an FHA loan, if they're doing that route, then 3.5% down is the minimum. And a VA loan for our veterans and active military is 0% down, which is a fabulous loan. So people think, oh, the MI, the mortgage insurance rather, it's pretty expensive. It's really not. For example, say somebody who's doing 5% down, maybe, credit score in the mid to 700s, they're looking probably at $50 to $60 a month on mortgage insurance. So still quite a bit of savings with them rather than coming in with that additional 15% down they'd have to do. So there's definitely options and something that we explore with people to see, what makes the most sense. Does it make sense to keep a little cash on hand for those renovations that maybe you want to do, or buying like another property down the road, rather than putting all the 20% or more into the one home?
Well, that's really great news, Bailey. So tell me, does the down payment actually have to come from the borrower?
That's a really good question. So a lot of times people come to me and they want to use what's called down payment assistance. And it depends on what county you live in, what state. These all depend on where you are locally. But here in Pima County, we do have a few down payment assistance programs, which are awesome. It's really just to allow people to get those funds, really come in with limited amount needed at closing and get into a house and just start building some equity. Also, if maybe they don't qualify for the down payment assistance because they're not buying a home that's in an area that is eligible, or they don't meet it because of income guidelines, then they can get a gift. And what that is essentially they're getting gift funds from family or friends, and they can use that for the down payment. So again, it's kind of limiting the amount the buyer has to come in with their own funds, and allow them still to get into a house with very minimal cost. So with the gift funds, that is treated just like your own funds. So they're gonna get the same rate as if they were bringing in their own down payment assistance, or down payment, excuse me. But the down payment assistance is gonna have a little higher interest rate. But again, you're getting quite a bit of money, and it's kind of, you have to.
And you're able to become a homemaker,
exactly.
So it's worth it.
Exactly, and the long-term goal is just to get people in homes, build some equity, build some wealth, and that's the first step, is owning a home.
I think that's great too. So now you know that we don't have to have 20%. In fact, there are lots of other options to get around that to get you into a home. All right, so next I want to talk about job history. Is it true that you have to have 2 years of work history in order to purchase a home?
So it's kind of a gray area, but ideally 2 years is perfect, but not in every scenario do you need to have 2 years. For example, let's say somebody is employed, has a good work history, they're working 5 years, maybe they take some maternity leave, stay home with the kids, and they're out of work for a year or two. If they go back to work, ideally in the same line of work, but doesn't have to be. But if they go back, full-time position, salary, or working 40 hours a week, or a full-time position, that definitely is usable income. It just has to be explained. Everybody's life is different and situational, and just because somebody takes time off because they chose to, doesn't mean they're not going to get a home loan. So it just depends on the certain situation and what the circumstances are and were. And if there is a gap, then we typically do need to kind of get a letter of explanation of what the reasoning was and verify previous employment. And then if we put all the pieces together and it makes sense, definitely should have no problem getting a loan.
So how does this work for somebody who's self-employed?
Oh, really good question. So self-employed, and then also commission income, because it's 1099 typically. You need at least 12 months history of that. So 2 years again is ideal to have for somebody who's self-employed, but 12 months at a minimum. And then again, it's just looked at case by case to see, what was their line of work before they went into being self-employed? Was it in the same line of work? How is their business doing? We'll get some profit and loss statements, see how the business is holding up now. But it definitely is doable. It's just definitely, if you're self-employed, you need to have at least 12 months.
Okay, so a lot of people believe that you have to have perfect credit to get a loan. Can you explain that to me? Can you tell me if that's true?
Yes, that's a great question. A lot of people do think that they do in order to be able to purchase a home. But truly, we have a lot of loans that people are in the 600s, which is not bad credit by any means. So your credit score will determine what kind of rate you're going to get, what's the best program for you, and that's something that I can figure out when you do an application. We do a credit pull, see where you're at, and it puts you in the best loan. It doesn't mean you're going to have that loan forever, but what's going to help is your mortgage is going to help boost up your credit score. So ideally, maybe if you start with one type of loan, later on you switch to a different type of loan that maybe has a little better interest rate for you. But really, we could do loans all the way up into the high 500s. So it's not really talked about too much because a lot of lenders don't really offer that. But really at Prosperity, we have 2 loans that we can go as low as 580. Typically, you need to be around 620 to 640, just depending on the loan program, but there are options to go into the 500s. Another question I get sometimes is, I don't have any credit, so how do I get a loan? It comes up a lot, especially for first-time home buyers that just haven't had a lot of time to build credit. And what we can do is actually use what's called non-traditional credit to help give them a score as far as the underwriter is concerned. So what this is say they have an electric bill and a car payment. We can track that payment for the last 12 months and use that as a starting point of what kind of loan we can put them in. So they don't have to have a traditional credit score per se, but that payment history on that utility bill or car payment, student loan, will be able to determine what kind of loan they can get.
Okay, so when you were talking, I heard you mention that not all lenders offer a certain program for somebody who has a lower credit rate. So can you explain to me the lending process as far as the interest rates? Would you, with Prosperity Mortgage, offer the same interest rate as another company, and can you explain the difference?
Yes, I highly recommend shopping around. Even people that come to me and they say, well, you're a first person that we spoke to and want to talk to somebody else, I highly encourage that. It's a big deal. It's a big purchase, one of the biggest purchases anyone's going to make. We're very competitive in our interest rates, but they can vary depending on the company that you go to. One thing that you do want to keep an eye on, though, is not just interest rate, but also the fees involved. For example, a lot of lenders like to charge what's called points, which is also, in other words, buying the rate down. So they very well might be quoting a rate at, let's just say, 5%, but the buyer doesn't know that that's going to cost them $10,000 to get that interest rate. So it's just something you want to look at when you are comparing lenders. I wouldn't do more than 3. You're just going to start to overwhelm yourself and it becomes a lot. But just look and see, where's the rate and where are their fees? And then compare, see where they're at, see who you match with, who you have a good feeling with, and just make sure that you're doing the right decision for you and your family.
So can you explain to me APR? I've heard this in conversations when you're looking for a loan, you're trying to get pre-qualified. I know there's certain APRs, and can you explain exactly what APR means for someone like me who doesn't really know, because I don't do lending?
Yes. So APR is the annual percentage rate. And going back to those fees that I mentioned earlier that you want to kind of compare and shop for, those are what consist in the APR. So for example, let's just say, a rate today at 6.5, 6.5, but maybe the APR is 6.87. So the lower the APR and closer to the interest rate, the better, because what that means is the fees involved to get that loan are low. If you have an interest rate at 6.5, but somebody's quoting an APR at 8%, you know that those fees are heavily inflated and you might want to look around further for a different option. But again, the interest rate is what you're making your payment. That's what your payment is based on. But again, the APR is important to see, okay, what's it actually costing me to get this loan?
So you mentioned a couple of different options that lenders, can provide. Can you tell me, how would I know at the end of it? Can I get a cost sheet from you that tells me what my ranges are? Because I don't know what I'm doing.
Yeah.
I'm not a lender.
No, absolutely. And any good lender should be giving you a worksheet, and that'll itemize exactly the fees that are involved. It'll show the lender fees, the title company fees, an escrow account, which is an amount that's collected at closing to start your reserve account for your homeowner's insurance and property taxes. So all of that is on one concise form. Yes, a worksheet is what you want to ask for, or a loan estimate. When you're under contract on a home, a lender is obligated to give you a loan estimate. And so if that's the case, then ask for a loan estimate, not a worksheet. But if you're in the first stages of just getting pre-qualified, shopping around, ask for a worksheet, and then you've got a couple different things you can have them laid out and compare.
Bailey, this is really great information. Thank you so much. If there's one thing that you could tell a home buyer, someone looking for a loan, what would you tell them?
I think, just get out of your own head and get off the fence and just get with a lender that you trust. My goal personally is to make it as simple and smooth as possible for somebody. I don't want to be intimidating. I want them to feel comfortable. Let's just have a conversation. Let's see where you are. Worst case, maybe you don't qualify now. I can absolutely get you set up on a path of what to do credit-wise, what to pay off, what to get, things like that, to get you in a position to purchase, because that's the goal, is we all want to build wealth, and owning a home is definitely an avenue to get there. So, it's just get off the fence and just get with somebody you trust. I think you just need to be with somebody who you are comfortable with and do an application, see where you are, and be able to get yourself in a place that you can purchase something sooner than later.
I think this is all just really good information, and I think it goes to show that your lender that you choose is just as important as the real estate agent that you work with. If you've learned something today or you feel like this video is valuable, hit that subscribe button and you'll have plenty more coming your way. Until our next Mortgage and Mimosas, cheers.